Stocks are getting cheaper even though the price of AI stocks is going through the roof. Why is that? Well, last week the AI bubble crowd got it backwards. Here's why. Last week we had Dell report earnings. They blew past everything. They raised guidance, and the stock is actually getting cheaper despite its massive run. It went up 30% in a day, the stock, up 234% in a year, and its AI server business is up 757%. This is crazy, and the stock went parabolic, up 30% in a day. How is it getting cheaper if the stock went up 30% in a day? Well, its earnings are going through the roof. Their earnings are rising faster than the stock price appreciation. And the PE ratio, the price to earnings ratio, if earnings are going up at a faster pace, than price, then the stock ultimately gets cheaper. And we're seeing that right now. This is not a bubble. This is actually built by actual real earnings. You know, with the dot-com situation in the 90s, we didn't really see actual earnings come up as much. It was hopium. It was, you know, we had so much infrastructure build out, and most of it was dark fiber that wasn't actually used. This is actually different. We're seeing tangible revenue, AI infrastructure revenue. Micron, SK Hynix, and Samsung all hit $1 trillion in market cap last week. And, you know, we're starting to see that the memory chips are the real commodity and scarcity component for this AI industrial build out in this fourth industrial revolution. We're still early, in my opinion, first or second inning. And, you know, memory is the real bottleneck, because with all AI, it needs a lot of memory and context to give you a tailored, precise answer for your queries and projects you're working on. This all happened while oil fell 19% for the month of May due to Iran-U.S. peace deal hopes. Who knows if it'll happen, but you're seeing some trajectory. It might move in the right direction. Either way, we can't build our hopes up because obviously, you know, we've seen this movie before, but in a way the denial is the negotiation. So we're going to see a little bit back and forth. At the end of the day, we're not going to know if this will hold until, you know, oil ships flow through the Strait of Hormuz. Once we actually see that, then we'll have more confidence. But I think AI, you know, even with the Strait of Hormuz closed for a few months, the AI strength is a 2-to-1 or 4-to-1 force, even stronger than the geopolitical situation in terms of economic growth. So that's why we're seeing the market still hit record highs. And what we saw with Dell and Micron, SK Hynix, and Samsung shows, you know, this AI super cycle is justified by real revenue and real earnings.